Right, what am I talking about today is like how a stock prediction could go, and where based on the data, you've got a setting where on the Yahoo Finance and also investing.com, it sort of predict where a stock might go, so the upside potential or the downside potential. Now, if you go on to Yahoo Finance or you go on to investing.com, it will tell you. So, say for example, Tesco, and say Tesco share price is say at say £4.30. It might say that Tesco down the downside for Tesco would be say 350, but then the upside for Tesco could be 680. And because there's a bigger upside to the downside, then one might think, okay, the potential is we're going to be looking up, or we're going to be looking to put a stop loss for the downside because the downside is much lower than the upside. So, the potential for this stock going down probably is going to be limited. But of course, for me and how I trade, I always look at what we call the supply and demand zone. Now, I've got to also get a significant zone, which I look at the monthly time frame and then sort of do a top-down analysis, because I'm looking for those turning points that are significant. Now, the minor turning points on the weekly, the daily, the 4 time frame, those turning points aren't significant. So for me to take a trade, we're looking at the monthly time frame and then possibly taking the trade on the weekly time frame, because those time frames are going to give you significant turning points, and that's where you have a higher what we call confidence and a higher probability of the trade becoming successful. Now, hopefully, the projection in terms of potential upside, potential downside, the supply and demand zones on the monthly time frame, taking the trade on a weekly time frame, gives some insight into what a progressive trading strategy could be or potentially could be. God bless. Peace out. Happy trading.